Hi, this is Mike Palmer with Group 1 Trading. This is Volatility 4-1. It has been a quiet summer so far. We haven't seen a lot of movement in the S&P 500 or in the VIX index itself. And accordingly, we saw the VIX volume and volatility actually both very, very low across those different front month options that we had all summer. That's June, July, now into August. Now, however, we saw a big buyer of calls, upside calls last week in both September and October options last week. And then going into the Fed decision today, we saw a little bit more activity. We had a Fed decision yesterday. They decided to cut rates a quarter of a point. The only question was whether or not they're going to cut it a quarter or a half a point. They cut it a quarter of a point. That looked to be mostly a non-event. However, the conference afterwards with Chairman Powell definitely created some volatility in the market. We saw the S&P 500 drop dramatically. We saw it drop as much as 52 points midday. We saw the VIX go through 16. That is interesting, and that is our first real bout of volatility we'd seen in since really in the late May area. So that's the first move we had in vol. Since then, we've seen some general movement in the market itself. We have the S&P 500 up about 20 points today, and the VIX pulling back $2. Accordingly, we saw big buyers of August 21 calls. They paid 52.5 cents. Then the market rallied quite a bit. Then they bought the August 20 calls for 51 cents. Together between those strikes, they bought about 75,000 contracts. That's notable. We expire on August 21st. That means people think that there is going to be more volatility in the market, and that what we had seen yesterday and today is something that's going to persist over the next few weeks. So we're breaking out of that quiet volatility paradigm that has dominated the summer so far. And right now we're looking at what could be an interesting August if this continues. This is Mike Palmer with Group 1 Trading. This is Volatility 4-1.